Hey, what's happening, guys? Dan Darrow here with another Options and Play video update. Just like yesterday, Old Man Winter still got its grips on me here. But I'll tell you what makes me feel a lot better are earnings trades that work the way you draw them up, right? So, Stitch Fix, this was a name that I spent some time talking about in last week's coaching session and kind of like walk through the rationale of why I thought it was an interesting volatility bet into the report. And just quickly kind of go over it again, the reasons behind it, and then how it played out today and like the target for the trade. So, when you're looking for setups, especially setups like earnings combo or some sort of volatility strategy like a straddle or strangle, there's a few things you need to consider, right? So first of all, what kind of attracted to me was the expanded volatility on earnings, right? So you see this and then this, right? So it had about a 5 point move on its report in June, and then about a 16 to 17 point move on the report in September, right? So what you can see, October, excuse me. So what you're seeing is that the volatility is expanding over the last couple quarters, right? I mean, the direction's been a little bit off, higher and then lower, but in terms of the magnitude of the moves, it's expanding, right? Then over the last couple weeks, right, or the last couple months, to be honest, you've seen Stitch Fix trade in this really tight range, which is great. You got like a tight consolidation, which should provide a base for an explosive move one way or the other, right? When things are in consolidations, you tend to get like these pent up moves when they break. So going into earnings, pretty substantial catalyst. You knew that a stock that's in a consolidation for 2 months, once it breaks the other side, it should have a nice pent up move because there's like real fuel for the either break out or break down because it really hasn't done much in the last couple months. So expanding volatility, right? A tight technical consolidation, and then also key levels that are in play both ways. So underneath recent support at like 23, what's the next obvious level? Well, it's 19 to 20, which is long-term support, right? So underneath this recent area of consolidation, what's the next key level? Well, it's 19 to 20, which is it's tested on multiple occasions since it's become public. On the upside, what's above, right? So you have above 28, you have the 3150, 3200 day, right? And then through that, there's this monstrous gap from last quarter. So you have a gap above, and you have visibility. With the stock, it was about 26 and change, 27 yesterday. You have visibility for potentially a room down to 19 to 20, right? So you have visibility for a big move either way. Tight consolidation, expanding volatility. Then you look at the options. What are the options pricing in? About 5.5. Well, it moved 5 in June. It moved 16 last quarter. Options are priced in 5.5. So yes, they were above what it moved in June, but with a stock that seen expanding volatility and a tight consolidation with key levels either way, 5.5 really didn't seem too bad. So that's why like those couple things combined led me to believe that volatility strategy was a good play. So went with the strangle here. And when I did that, I tried to keep risk relatively 50-50 on the bull and bear side. I didn't have like a real clear bias on this one. It was just I thought that if it moved if it moved solidly one way or the other, it could have like a extended move, so into the gap or down to 19 and 20. So obviously this morning it opened lower. First of all, it had a pretty big reversal last night, and then this morning it opened below 22. So as soon as it lost this area of support, 19 to 20 was the obvious first target, and it blew through it. In the first hour of the day, giving you an opportunity to cut this trade loose, like right away off the open. So it's one of these scenarios where it's not as if I had like a bias, bullish or bearish. It was just that I had a bias that I thought it could move. And if you draw the trade up not thinking in direction, just looking for movement, then there's multiple avenues to capture that trade, right? So I didn't care if it went up or down, just that it moved. So when it moved and hit the target, then just it's one of those opportunities just to like cut the trade loose. I didn't roll down because it's in such a major area of support. So going forward, I'll probably keep an eye on it, see if it bounces, but just take the trade. It was a quick overnight trade, hit the target, in and out. You don't got to worry about sitting on this for a few days. So, still earnings coming out. A little bit fewer and farther between, but still names that should be moving. So keep an eye out of those coming down the line. As always, love to hear from you. Questions, comments, reach out. Hope you guys have a fantastic night, and I'll talk to you all tomorrow.